Yeah, it is your boy GFX, back again with another video, back again with another banger. So yeah, guys, today I'm gonna teach you what is liquidity. I do not know people understands the importance of liquidity, how liquidity is important in the market. So guys, today I'm going to go deep down to teach liquidity to those who are in Forex but do not know what is liquidity. Guys, to make it simple, liquidity is a very important tool. I can say tool, or it's a very important secret to use in Forex market. Actually, liquidity is a secret of trading and to make money. I don't know if you can understand what I'm talking about, guys. Liquidity is a very, very crucial tool to use when it comes to Forex trading, guys. If you're not using liquidity, you're going to lose a lot of money. All you need to do, guys, to make money in Forex is to know what is liquidity. I know you have been teached liquidity in from different courses. You have bought courses to different people teaching you different strategies, but they've taught you liquidity, but they didn't give you the real thing and the real reason why liquidity is important. Forget all the strategies in the world. Focus on liquidity. So guys, further ado, before we go through the video, please like, share, subscribe on my YouTube channel so that you can watch more videos that are coming. Today, guys, I'm going to go deep into liquidity so that people who don't understand Forex market will understand it today. And this is a very easy strategy to use, guys, and it's going to profit you and it's going to make you a lot of money if you focus on it, and you're going to make a lot of money if you watch my videos, subscribe and share this video to your friends and family, and they must not forget to subscribe. I hope you're subscribing right now. So guys, let's go to liquidity, guys. What is liquidity? Guys, liquidity, we're talking about the high and low in the market, guys. I know you have heard about higher highs, higher lows, lower low, higher high, lower low. I forgot those things. But when you talk about liquidity, guys, you're talking about the high liquidity and the low liquidity. High liquidity, guys, is where you find many buyers and sellers, understand, in that certain zone, in that certain order block. I know some of you don't know what is order block, but it's a certain zone where there's too many sellers, where there's too many buyers. That is liquidity, guys. I don't know if you understand. Where there's too many sellers and where there's too many buyers is liquidity, guys. And the market tends to be attracted to where there's too many sellers, to where there's too many buyers. And after it crashes where there's too many sellers and too many buyers, the market will reverse to create another liquidity level. And when the market reverses, create too many sellers, too many buyers. So let's go deep in the chart so that you can understand what I was talking about, guys. So I'm going to push the chart backwards. I'm going to push the chart backward. Okay. So to those who understand the Forex market, they know that, anyway, guys, I'm using a daily time frame. So those who understand the Forex market, they know that the market, when it's moving to the downside, it creates a higher high, and then it creates a lower low, and then a lower high, a lower low, a lower high, then a higher low, you understand, and then a higher high. It's higher than the previous high, you understand. So when you see this, you also see what? Liquidity, guys. You also see liquidity. So what am I talking about when I'm talking about liquidity, guys. I said when I'm talking about liquidity, I'm talking about where there's too many sellers, where there's too many buyers. So I have a question for you guys, a question that you won't answer, a question that I will answer so that you understand. Guys, what do you think you find here, guys? What do you think you find in this level, guys? I think let me use this branch. Guys, what do you think you find in this level, guys? What do you think? Tell me, what do you think when you come to this level, guys? What do you think? As a forex trader, you must know if the market came to this level and went down, let's say 50%. Guys, when I'm talking about 50%, I'm talking about 50%, guys. So the market pushed the upside, right? It came here to this level, right? I don't know if you can see it. The market came to this level, guys. Let me adjust here to be straight. Yeah. So the market came to this level, right? And then it went down to touch this line. I use this tool because so that you can see that the market has reached 50% of the push that it made, right? I'm drawing that to make you understand. If the market came to the upside and went down to touch this 50% level, what must come into your mind, right? I've asked you that, why do you think the market turned here? Because there's too much sellers. Understand? There is too much sellers there. Why do you think the market reversed to this level? Because there is too much buyers. There are too many people buying on that level. Understand? But what is liquidity, guys? Liquidity is where there's too much buyers, where there's too much sellers. And I said what to you? The market tends to be attracted to liquidity. Guys, let me remove this one, guys. Let me remove this one. Let me remove this one again. Understand? So I said here, there's too much buyers. Understand? That's why I'm saying there's too much buyers, because they push the market to the upside. But remember, if there's too much buyers, the market, no matter what, guys, I don't know if I can explain it this how. If there is too much buyers, no matter what, the market will come back to that level again. It's either it comes back to sweep that level, or it comes back to becomes back and make a resistance. So there are two things. If the market comes back to that level, it sweeps that level, or it creates a resistance. So it means if it sweeps the level, which means those buyers that were there, the buyers that were here, they were not powerful enough to handle the market to the upside. But if it sweeps the level, this level, which means the buyers that were there, they're too weak. So sellers have more money to push the market to the downside. So guys, liquidity, I am explaining it again. The market will always attract to liquidity. And now, as you can see, we're going to draw liquidity here. We're going to draw liquidity here, guys. We're going to draw the line here. We're going to draw this line, guys. We're going to draw this line. This is just the line I've drawn, right? Let's say the market is not yet formed, guys. This market is not yet formed. Let's say the market is not yet formed, guys. It's not yet formed, as you can see, guys. The market here, guys, is not yet formed, guys. Understand? The market created this, guys, right? What you must do, guys, you know that, okay, the market now is pushing to the upside. There's no trade. I'm not going to lie to you. I'm saying I'm going to trade here and I know what the market is going. No, I'm not going to trade. I'm not going to act like I'm a guru or I'm a pro. But what I did is that I draw a line here, guys. A line that is very straight, so that you understand what am I talking about when I'm saying this is liquidity, guys. After drawing this line, I'm going to say this line is liquidity, guys. Why am I saying this line is liquidity, guys? Because this line, it has too much bias. They force the market to push the market to the 50% of this push. Understand? So it touched this level, which means that the market, the buyers are strong now. So this is already a qualified liquidity level. You understand what I'm talking about? It's already a qualified liquidity level, right? So if it is a qualified liquidity level, it must come back to that level because there's so much bias there. The market must must get attracted to that level. That's why I'm saying liquidity is always attracted by the market. The market wants to sweep liquidity no matter what. It's either in a daily time frame, in an hourly time frame, or in a 4-hour time frame. The market tends to come back to that liquidity level. It tends to come back to that where buyers were trying to buy the market more and more. So guys, now the market now is trying to push to the upside. So what we must know that the market has too many liquidities. So as you can see now, the market is here in the middle, but I'm going to draw this line and I'm going to say this line is our another liquidity. This is what I didn't tell you, that if the market sweeps liquidity or creates a resistance on the liquidity level, the market will go back to find another liquidity to sweep or to find another liquidity to go to. Let me show you what I'm talking about. We're gonna play. You're gonna see what's going on. The market went to that liquidity level. It didn't touch. It created resistance, and then it went back again. Went up, back again, as you can see, because I've seen everything. So it went back again. It swept the liquidity, as you can see. But after sweeping the liquidity, the market will try to attract the below liquidity. So what I'm talking about, it will try to attract which liquidity? It will try to attract this liquidity that I've drawn here, guys. This one. It will try to attract this liquidity, guys. No matter what, it will want to come there, but it will never come there if the market didn't reach 50%. So I'm giving you a strategy to use. You understand? So wait, guys, wait. I didn't draw this correctly. I didn't draw this correctly. As you can see now, the market is not reached yet 50%, right? It's trying to retest to the back to the downside, but we have liquidity resting here, and this liquidity needs to be swept or need to create a resistance on that liquidity. But look what happens, guys. Look what happens, guys. Look what happens. Let's press play, and then you're going to see what happens. The market comes back to the 50%. So if the market comes back to the 50%, what does the market tells you? The market tells you that I am trying to sweep that liquidity you're seeing there. Not all the time is going to do that, but the market tells you I am trying to sweep that liquidity that you see there. It's resting there. It's trying to sweep or create a resistance. Understand? Do you understand what I'm talking about, guys? And if you understand, please subscribe, like, share the video, and don't forget to comment anything you want, any question you want to ask me, comment below, and then I'm going to answer it on the next video, guys. I really appreciate those who are gonna follow my videos, who are gonna follow and subscribe on my YouTube channel. Guys, as you can see now, the market is 50%. Now it's trying to go where? To the liquidity level, guys. And guys, it will reach a liquidity level because the market tends to be attracted to where there's too many buyers. I don't know, people are understanding me, or they are left behind. But this is how liquidity works, guys. As you can see, guys, the market will come back to sweep the liquidity. The market will come back and sweep the liquidity. I want to show you that the market will come back and sweep the liquidity. No matter what, guys, no matter what, the market will come back and sweep that liquidity. No matter what. No matter what. And there's something that people do not notice, guys. There are too many liquidities are created, and the market will try to sweep those liquidities, guys. Will force to sweep those liquidity, guys. There are small liquidities that are created that when you push to a lower time frame, you're gonna see this another liquidity has formed, guys. You see, guys, the market swept this liquidity, is creating a resistance, or it's gonna sweep the liquidity in full. You see, the market respected this liquidity because it has too much buyers there, and buyers were here. Understand? So they tried to push the market, but they failed because sellers always have money to push also the market to the downside. Let me stop here, guys. So, guys, you see that here it's a large liquidity level. You see, It's a large, but they are smaller ones, guys. They are smaller one. As you can, if I use this brush, guys, you can see there's liquidity here. So it got swept again. The liquidity swept here, another liquidity swept here, another liquidity swept here on it for the downside, another liquidity swept here. You see, the market is sweeping the liquidity. It went up, it swept the liquidity. It went up, it swept the liquidity. So it went up, it swept the liquidity. So guys, the forex is easy if you understand liquidity, and liquidity is important. Thank you for watching. Please subscribe, like, and share. And guys, watch my next video teaching you about, showing you and teaching you about candlesticks, guys. The importance of color candlesticks, guys. Because don't use the green and red candlestick. They're going to control your emotions. Use color different candlesticks. Thank you, guys. Thank you for watching, and hope you have a great day.